The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday at 11 o'clock until noon Eastern Time. And, celebrating, the day that's day after the official Veterans Day. I wanted to read this. 24 notes. Dan Butterfield was a New York businessman turned Union general. People seemed to love him or hate him. He was awarded a Medal of Honor for rallying his brigade under withering fire, but he had a bad temper that irritated fellow officers. One wrote that he was a man of blemished character. Perhaps so, but he also had poetry in his soul. One night in July of 1862, he called the brigade bugler to his tent. Butterfield wasn't happy with the regulation bugle call played at the end of the day to signal lights out. It wasn't very musical, he said. The general had something different in mind. Since by his own admission he couldn't write a note of music, he whistled it for bugler Oliver Norton. When Norton played it back, it wasn't quite what Butterfield wanted, so they went back and forth for a while, the general whistling, the bugler blowing, until they had something Butterfield was satisfied with. Norton used the new call that night. Buglers from other brigades camped nearby were so struck by it, they began using it as well. Soon the call spread to the whole army, and to the Confederate Army as well. And so a collaboration between a general and a bugler on a warm July evening led to 24 notes that have gone down in history. A haunting melody we all know, which announces the end of day for soldiers and graces the air at military funerals. Taps. Isn't that interesting? Sometimes things happen kind of serendipitously, and they remain icons for generations and generations afterwards. So here's to the vets that have served us so well. Thank you. The Dow is down 24. The S&P is down $1.64. The comp index is down 5. Just so far, when you consider the damage that's been done to many stocks and certainly to the market itself. And one of the reasons in my opening call, it's my service that goes out every single day from about 6:15, 6:30 in the morning. I start sending charts to my site. First the Dow chart, then the diamonds, then the E-minis, the futures. Here's the chart that you can see right now, right there. It's got a white background. This is the daily chart right there. You see how it hit that blue line? That's the 200-period exponential moving average, made a very long-legged doji, and now we're having a tight series of parameters on the upside and downside today. Look, here's a 120-minute chart, attempting to make a U, but actually that's not the pattern that I really think I'm going to focus on. It's the rectangle formation, and that rectangle formation might remain there for a little bit longer. Maybe another day, maybe another 2 days, you don't know. Staying between 1363.50 on the low side and I think it's 1388 on the high side. Yep, 1388 on the high side in the December E-minis. So we're going to watch this one real closely. Now, you've got gold up. Let's see, it was up. Nope, now it's down. And I consider that gold is... I'm watching it really closely, because if it becomes a currency of fear, then we're looking at something that's very different. Because if it's a currency of fear, it's going to ignore what the general market does. It's going to have its own little mini bull market. Might not be a mini bull market. It could be bigger. But right now, I still have to go with all my technicals, and I still see very limited upside. Nice action last few days, but limited upside action. I believe that we will be making in the monthly chart lower lows and lower highs in the gold. Silver is also down. It's down 23 cents at 32.3. Now, crude oil has just been in a this is a very interesting phenomenon, because if you look at the USO, I'm not sure if I've updated it in white. Maybe I have. Maybe I have. Kind of. You'll see that it's made that arch formation. This is a pattern that I point out very often, that you can go up in the same number of bars to the upside, the midpoint, the fulcrum, the point that I call the for those of you who don't know, it's in home building, it's a term. It's the plumb line. You want to find a straight line from say a sheetrock at the top, and you just drop the string with a weight attached to it, and then you flick it, and it makes a beautiful straight line on the board in a color that the string has got adhered to it. So in this particular case, you've gone the USO, which is the United States Oil Fund, from a low of 29.02 in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 bars to the upside to 37.17 the week of the 14th of September. Now you've come down in 1, 2, 3, 4, 5, 6, 7, 8, 9, and it hasn't yet broken to the low of the week of the 29th at 29.02. So far that's saying, yes, there is weakness in crude oil. It hasn't come down as much in price. It's used up the same number of weeks. But we'll see what happens by the end of the week, because if by the end of the week it is holding above 31, the round number low of last week, that's going to be a positive to say, hey, I'm not breaking down like everyone thought. I could still have a nice bounce. I could make a smaller arch formation before I come down. Then I would have to use a different plumb line to talk about the left side, right side price time match. So that's one of the techniques that I like to discuss and to teach in my Master Trader series. This is on the ChapmanWave, that is, right from the beginning, going all the way through to the more advanced techniques. How you starting off with how you count each successively higher peak, how you go from the low bar. In this case, in the USO, it's the low bar of the 29th at 29.02. You get your first peak at 33.08 on the week of the 6th of July. The week of the 20th of July, you get peak B. Well, it's confirmed the following week. That's the leg B. The next week makes the peak. And then leg C continues high. It's called the floating letter. In other words, that letter continues floating until there is a peak. And then it's called a leg C goes to a peak C, and it does that, confirmed the week of the 31st of August with a lower high bar of 36.08, and then the leg D concludes at 37.17 on the 14th. That's that peak D. Look at the MACD, look at the stochastic, and then look what happens to the stochastic. I love to teach about it, how the stochastic can give you so much information. You would not see it if you didn't have it there. Now, sometimes it's better just to have what I call the naked chart, nothing on it, just the chart formation. Sometimes it's way better. Most of the time it's better to have the technical skills. They're giving you that internal mechanism that goes on with the stocks themselves. Then you've got, so crude oil is acting okay right now, but acting quite poorly. And if you look at the monthly chart, that monthly chart of the USO is making the dreaded H that goes to an M formation, then a continuous M formation, which says invariably, this kind of formation eventually cracks the left side most important low, in this case the low of 22.74 made in February of 2009, and then there's a powerful leg back, and then the next pullback is the most important, because has it completed its down move, and now it's going to have a significant move to the upside, or has it broken every bit of support and it's going to continue to fail? So that's going to be what we watch in the technicals and the monthly chart. Then you've got bonds. Bonds are only up 8.30 seconds at 151.28. But what's really important about this particular move right now is that if you look at the daily TLT, which is the Lehman 20-year T-bond fund, it's in a very strong leg D up in the daily. The monthly is just suggesting that maybe that was a peak C and not a peak D in the monthly. You remember I have this fine-tuning on a monthly chart with a 25 cents or 26 cents difference in price. Makes a huge difference going back 5 years to 2009, 3 years. So so I have to consider that the 9-period exponential moving average is very important in the monthly chart. So far, it's holding very well. MACD hasn't crossed negative. The stochastic's at 79%. That's a little negative, but it's not. The fast moving of the MACD right now is more important. And its new leg B up in the weekly chart of the TLT, having held that beautiful sustained move right there. That sustained move in the up track. I call it the up track. And that says it's above that. It's above the 9-period moving average. It's just now taking out a dashed line. Let me just show you exactly what I'm talking about. That dashed line resistance. It's just taken down. MACD has not crossed positive this week, so we'll wait until Friday and see what happens. But if it does, and the price goes to 127.90 to 128.30, somewhere around there, that's going to be very important. And the daily of the TLT is well above the 200-period exponential moving average support. I showed this double cup formation, little nickname we have here, DP. And what happens is that you can expect that because it's gone so much higher with the stochastic of the MACD so strong, the stochastic's at 93%, that there's a good chance it's going to try to test 127.72 is the high of the 31st of August in the TLT. Now, the volatility index, and then we'll get to calls at 877-927-6648. Yeah, the volatility index, this is so fascinating, has rallied, but it's still way underneath 20. It is at 17.64. In fact, it's down 97, down 5.25%. And the market is down 27, and the Dow is down 27, the S&P is down 2. This is really interesting because it's saying, be careful. There is a chance that because the stochastic is still underneath 80%, has not gone once above 80% since it did that back in September, there is a chance that the volatility index is merely saying, I am building, let me go to the black chart if you don't mind, because I've got a lot more work done on the black chart, VX.X. It's saying, I am building up enough energy, holding the 9-period exponential moving average in the weekly, that you've got to be careful that at some point there isn't a sudden spike that takes me towards the 19.66 area, which will be the next leg up, and that next leg up will say, uh-oh, you get to 19.80, 20.23, and that 200-period exponential moving average at 22.12 will be calling. It won't be calling, it won't be beckoning. It'll be shouting, I'm a magnet, I'm a magnet. So I'm going to be watching this really closely. Meantime, as I said, in my opening call, that's my daily service that goes out to subscribers. We've got 4 shorts. They're still doing very, very nicely. I've got 2 longs. 1 long we just got today. I don't know if we're going to be able to keep it. I've got the tightest stop. I've got a very tight stop, like a 1%, maybe 1.25% stop on it. And it's just a small position. It's a very nice looking chart. It wasn't leg D, and that's usually where you got to be careful. But the way I believe it was leg D, the way it's been holding and rising when the general market's been falling has impressed me, and it is one of the sexy stocks in the IBD. So we'll have to look at that. Yeah, it's in the 120-minute chart. So we're going to watch carefully, see what happens. Now, one thing as we're going to go to a break, if the Dow breaks to a new low in the Dow and then a new low in the S&P today, that's going to say that the magnet of the close on Friday is going to be really important. I'll be back with Mike in New York straight off these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and the Dow is down 23. S&P's down $1.80. Just a kind of a wait-and-see attitude is permeating this market. This is what I'm really looking at. And Brian, I'm sorry, Brian, I didn't see that you would call first. Brian, Central Central California. I wanted to know about IBM. So I need to just talk about this because I know I'll forget. And if Brian, you want to call back, that's fine. But let me just tell you, you called about IBM. I've been talking about IBM for a little while. There are a couple of ChapmanWave formations that I never want to ignore them. They are way too important to ignore. And one is when there's a pattern that I call, first of all, if there's a pattern that I call the instant restart and it works, and you get an alternate wave count, and that wave count gets you a top that turns out to be a double top with a cup formation, the pattern that I call the drop bucket pattern. It's just a nickname I gave it. The real issue is that it's a pattern that says, be careful, because you've just made a double top after a series of moves that had a diagonal resistance line that you could not break. And that's what happened to IBM from the low of 69.50 back in November of 2008. It went to a huge leg up, leg A, powerful strength. Then it pulls back at 134.26, pulls back briefly, and then it starts another move up and goes B, C, D. Then after D, within 3 bars, doesn't matter that it's a monthly or a daily or a weekly, in this case it's a monthly, it makes a brand new high when you use an alternate count. So that's E/A, F/B, G/C at 210.69 pulls back in April of 2012, makes a cup formation with a very interesting candle on July of 2012, and it runs up. It's very important that that candle sees a higher close, and it does it and makes a new all-time high at 211.79. That creates this pattern that I call the double top. It says that if you pull back more than a third to a half, there's a real good chance you're going to test the bottom. But if IBM is going to test the bottom of 181.85, right now it's down $1.50 at 188.05. If it takes out 181.85, you have lost, and it closes below it. You've lost one of the key ingredients to my Dow Quartet, GE, IBM, MMM, and UTX. Why? Because IBM has been a leader. And it made a high with the Dow last month. The Dow also made a, S&P did not. S&P's already in the second month of not making a new recovery high. That's the high bar. That says to me, be really careful. Why? Because the monthly chart leads to the weekly chart going backwards. You remember on Monday, on Friday, I gave you that whole story. I wonder if I can find it. I like it, sir. I'd like to read it again. About going to the doctor, and you have your appointment, and it's one of those appointments you really dislike, colonoscopy or whatever. And so you make the appointment, and now you're looking at a year. But the year turns into months after the first month has gone by. You say, 11 months, and you're not even thinking about it, but it's actually months. All of a sudden, you go to say, hey, 6 weeks, 4 weeks time, I got that appointment. Oh, my God. And then it turns into days, and then it turns into hours, and then it turns into minutes. And then you're at the desk signing for an appointment for another, back to the 12 months. So you've got to learn about time frames. So the time frame says the daily gave a sell signal. The weekly gave a sell signal. Now we're looking at the monthly, and the monthly says, be careful. So now I'm going backwards. I'm going back to the weekly. Weekly says, aha, it's the same thing. We've made the cup formation. Stochastic is lousy. It's at 14%. The MACD is poor, and I'm pulling back. And it says, be careful, because that's the same number. You go on to 181. Oh, is that the same number? Yeah, 181.85. You're going down to the 160.45 level, which is the 200-period exponential moving average, if the weekly technicals remain very poor. Then you look at the daily and say, wow, the daily has just been straight down after a gap at peak D in the ChapmanWave. And in this case, you absolutely did come down in a shorter duration, because it was a crash type formation. Then normal, instead of the usual cup. Look at that beautiful cup inverted arch formation back in August into early September. Beautiful arch formation. Now look what's happened. It plunged underneath, tried to turn the 200-period exponential moving average into support. Now it's resistance. This is something that I'm going to watch really closely. So IBM, that's my analysis. And I'm sorry, Brian, you were on right up until that moment, and I just wanted to do that. Mike, you're on next. Hi, Mike. How are you doing?
Good. How are you doing?
Very, very well. Thank you.
I wanted to get your thoughts on Verizon and AT&T, both of which I'm long. When should I get out of those if need be?
You know what? I think that's an absolutely great question. I spent a little time. I didn't quite update the charts over the weekend, but going into the weekend, I spent quite a bit of time, Thursday and Friday, looking at these charts and saying, you know what? These were the great winners. These were the dividend plays. Now, are we looking at something that says, hey, dividend plays, you're not in fashion. I'll be right back, and we'll talk about that with Mike.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman here. The Dow is coming back a little bit, down 18. S&P is down $1.22. This is really poor action when you consider that the Dow has been smashed over. All the indexes have been smashed over the last week or so. Well, last week. And I'm expecting that there's going to be a bounce at some point. How that bounce occurs, when it occurs, and which stocks rally with the general market and which ones fail is going to be so important. And at this particular point, we are looking at Verizon. VZ is the symbol, 42.78, up 15 cents. Mike has called in, and he wanted to know what to do. He is along, and this is the way I'm going to look at it. There are a couple of things that are going on with Verizon. If you look, I'm going to work backwards. If you look at the low, in fact, I'm going to do this because I think that I want to demonstrate as much as I can in this particular period as we're leading towards my December 6th and 7th Master Trader Series ChapmanWave webinar coming up, starting from the very beginning, how you identify lows. Let me show you. The Verizon Communications made a low at 23.07, and that 23.07 had a long wick, and that long wick has never really been filled. In fact, what happened is went to a peak A minus, hit the 9-period moving average, exponential moving average. That was from October of 2008. It ran up for 3 months, hit that moving average, pulled back, and then it started another attempt at a buy market, and it went to peak A, and then to peak B, and it failed. Then it restarted again, and this is what we call the this is the second signal, the third signal, and what we call when the buy signal fails is a restart, and that restart just merely, and I have to tell you, if you can identify restarts, they are very often powerful. They take you past the left side arch formation or the M formation. They go over the peaks, and once they do that, they can move quite a lot higher. So now look at this. It goes from a low bar of 25.99 in July of 2010. It goes peak ABC, peak D. It uses this maroon line, the 9-period exponential moving average. It literally walks the 9 EMA until it jumps a little bit too high, and it goes to peak E at 46.41 in July, pulls back for 2 bars, and then it makes leg F, and now it looks like peak F at 47.32 last month. The MACD is still good. Stochastic is starting to drop sharply at 83%. So far, if you look at chart patterns repeat over and over, you remember I was talking about the cup formation in IBM? Well, lo and behold, we've just got a cup formation right here. So we've got to be real careful that there isn't a left side, right side price time match here, and that there's a failure, because if Verizon starts to take out, it's at 42.78. If it closes under 40, any week this month, the month's nearly finished, going into the first week of December, I would have to say that there's a lot of information here that says there's a good chance that was a peak F, and it could be a significant hat-trick top. Why? Because if you look at the weekly chart went to a peak D. Remember, that's the requisite of the ChapmanWave. We've already got 2 peak ABCD. Now there's another ABC, C1, C2, and it goes to peak D at 47.32. There's a left side, right side price time match that says that if Verizon takes out the low of 42.18, the low of the week of the 24th of August, there's not much support until it gets to the 40.92 area. So that's something that I would watch closely. My biggest concern is that it's become an unfavorable stock. The stock that it was, the stock that was the favorite because of the dividend, etc., is now the unfavorite. And that's my biggest concern. So that's the weekly. And the weekly says you had better very soon cross 44.08, the 9-period exponential moving average, with the technicals moving up. And I don't think they can do it in such a short period of time. Otherwise, the stock is going to go lower. Now let's look at the daily chart. And the daily chart says the 200-period exponential moving average is at 42.44. The low bar that it made a left side, right side price time match and broke it, but it hasn't closed below, is 42.18, the low of the 23rd of August. That says to me, yep, there could be a bounce, but I'm suspecting there's going to be a little arch formation that comes back and retests the low that was made a lower low, which was 42.01 on Friday. And if that occurs at any point, then there's very little support in the daily until it gets to 40.92. So you can see the symmetry of what's going on. I've got the black background chart, has all of this notated a little differently, more thoroughly. So, Mike, I'm going to suggest something. I don't think it's ever worth keeping a dividend stock just for, some people do. I don't believe it's worth keeping a dividend stock just for the dividend. If that dividend gives you, what does it give you, about 5 or 6%?
Yeah.
Okay. So if the stock drops 5 or 6%, that's capital. That's not dividend. That's capital. So if the stock goes to 37, all of a sudden you're looking at 10% off your capital, which is way larger than any dividend can do in 1 year. So you'd have to have a lot of dividends for a long period of time. So I'm going to suggest that you be a little careful here. I'm not going to say just jump out of it right now. The 120-minute chart, I looked at this over the weekend. It matches a lot of other charts. It actually matches the Dow Diamonds chart very, very much. So I'm suggesting that you hold on a little bit, give it a little bit of room, just very short term. So if it does go into 42.01, you could make 41.90, somewhere around there, the stop on a little bit of your position or some part of your position. Why? Because the habit of buying the winners is still there in many fund managers' minds. So they might still give it a little bit of a bounce. You might get 43.50 at some point, or a little higher, 43.90, maybe even 44.20-ish. I just don't think it's going to go above that. So my concern is that you're in a stock that was a great, you've been in this a long time or just recently?
Oh, a long time.
You see, that's why I didn't want to say to you, just hop out, hop out. That's not the way it should be. My suggestion is take a little bit off if it starts to take out the lower Friday. You don't have to panic about it. There's dividend stock. People are going to keep buying it. The magnet that I'm looking at is the 42.73-ish area, between 42.44 and 42.70. So even if it pulls back, you'll have another chance, I'm sure, to reconsider it. But be aware that dividend stocks like Verizon and like Telephone has also got a potential peak F. I know it has, in fact, got a peak F confirmed in the daily, and it's broken under the 200-period exponential moving average. They're kind of working in concert. When stocks of the same sector work together, the best ones, I'm hesitant to say to you, stick with it. I would rather say to you, the capital gain that you get is going to, with the dividend that you've got thus far, might more than make up for the fact that it might bounce a point, maybe a point and a half. But it looks like it's going to have to retest that 39 to 37 area at some point. So I'm a little concerned about it, but don't get all excited. I know you don't, but I'm just saying this is not the sort of thing that you turn around and say, "Oh my God, I bet it's because it could go down to 35." That's not the issue. The issue is you've got to just think about your portfolio, where it fits into your portfolio. But I believe that I'm getting a sell signal in the monthly that says, like IBM, be really careful, because IBM is actually one of the better dividend-paying stocks in the high-tech sector of the very, very big caps. And if it's starting to say be careful, and Verizon's starting to say be careful, we might be seeing a rotation into different sectors here that might hold better benefits, and therefore these are the ones that money managers will start to sell, and you'll see a rotation out of them. So that's my suggestion. Just be a little careful. Take something off if it goes underneath the lower Friday. Or even now you could just assess how much you want to do and what you want to do, how it fits into your portfolio. But I've got a left side, right side price time match in Verizon Weekly that says I've just drawn it as a potential. It hasn't done it yet. But if it starts to get into the 41 area, to the 40.50 area, then that's that diagonal line that I've drawn here, and I'm going to make it pink so people can see it. That's the line that I'm looking at as it heads down towards the 37 area. I hope that helps you.
Yeah, Basil, one more thing. If you come across any high dividend stocks, high yielding stocks, that are in that's not in an F, that's in a ABC. If you could highlight that, or if you come across that.
You know what? It's interesting that you mentioned that. I am finding some stocks that are beginning to look attractive. I'm just trying to put them as a sector. I don't want the single stock in a sector that's weak, a single stock that looks good, because it'll be dragged down. But my eye is telling me, I came across one, I've written it down. In fact, I just don't know how much yield it gives me. I will. In fact, that's part of the rotation that I'm looking at here. Which areas would I like to rotate into that seem to have upside potential and at the same time might be avoiding any more serious move in the downside? Good idea. Thank you very much.
Bye-bye.
Thank you. That's Mike in New York. So now, so talking about my the portfolio I have for my opening call subscribers in my Traders Corner. That's my newsletter. I've been looking at stocks that quite a few of them have the potential to make this peak F top in the monthly. The reason why I want to stick with them is we started small positions, and I would like to add on a rally a bounce in these. Is that if I'm correct, and you always have to say if, I mean, you know what, we're not the market, we just do the best analysis we can. If correct that the monthly charts are giving hat-trick tops, it means the upside is very limited, number one, and it says that time and price to the downside would be the normal order after a sixth highest peak, that's peak F in the ChapmanWave, that kind of top in the monthly. So that's the reason why I'm looking at it. Meantime, I'm sure the market is going to struggle and struggle. It's attempting to have a bounce. And the volatility index says there's a chance it might succeed. And I'm looking at that. I'm saying, I don't want to add to the shorts right now. I'd rather look at one or two longs that might be good as a short-term play if they work out. And I'm being very selective, but I'm also looking at a list of shorts, potential shorts, that is increasing to the point where I don't think I can fit them in. So I like 6, maybe 7 stocks in our list, because that's all I do so much work. I can't type all that stuff. But it doesn't matter if you get successful ones. You don't have to have a whole bunch. It's better to have a few that really work, or not few, but a handful that really work, rather than having too many that could imbalance your portfolio. So that's what I'm looking at right now. Now, there's something that over the weekend that I decided I would like to do. I've been talking about Investors Business Daily and the, let me see if I can just get back there. Investors Business Daily that I always look at. Now, have I lost it? Yeah, I've lost it. All right, I'll just get it back right here. So in Investors Business Daily, which I have the online service. I happen to love getting the newspaper. I'm just old-fashioned. I don't know what it is. But I didn't get it this weekend. I usually like to get it regardless. I like the paper there. I like to look at it. I like to turn to paper. I like to serendipity. I like to just suddenly see something I wasn't even looking for, which I never find if I'm on the online version. But in the meantime, back at the ranch, what is really important is that there's been such a rotation in the IBD top 50 that some of the former really big winners are gone. And we've got new winners. We've got some that had fantastic chart patterns. Let me explain to you what I'm looking at. I'm getting it up right now. So there we are. So here's a stock, TDD. It wasn't up in the top. It was up in the top 20, but it wasn't in the top 50. So now DDD is making that cup formation. It's gone, confirming a peak D in the ChapmanWave in the daily. It's a leg D. And I just need to lift this up so I can see. Yeah, this week, if there's no high above 46.92, it's going to be a peak D with the technicals not confirming this recent rally. And the monthly chart is a 3D Systems, DDD trading at 43.13 down 287, is in leg F with a doji candle, but not a very long-legged doji candle, but long enough for me to say, okay, any pullbacks is there should be a re-attempt to get to the 40. What was the close? 43.10 area. And that 43.10 area says to me that if there's no new high above 46.23, but instead by the end of the month, you're looking at 39. We're almost there. Oh, certainly if you get to 38.20 to 37.60, that says, hey, be careful. This could finally be making off the most spectacular move. I know it was one of Dave White's stocks at one point. Just a great pick, Dave. And so this is one of those stocks that's just a spectacular move. So it could pull back down, but in fact, there's still a lot of support. So would I want to go short a stock like this? I just don't know yet. I want to see how it closes today. That's number one. Number two is Kors. Now, Michael Kors has had a peak E daily, a peak F weekly, and only a leg B in the monthly. So I have to now skip the monthly because it was an IPO. Hey, this might fail, never make it a leg D. I don't know. They usually do. But that weekly chart is breaking a rising wedge formation. MACD is turning down. Stochastic's now at 75%. And the daily is broken below the last low. So you go through these stocks. It'll be very interesting. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern. on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. Just to finish my thought, whatever that thought was. Oh, yes. Triple D, that's DDD, 3D Systems. It's pulling back here, but it's still a stock that most money managers would grab if it starts to pull back. Cause I'm really concerned about. Melanex number 3 is looking quite good. TDG is looking very good. RMD, ResMed, there are a couple of others. Maybe I'll have a chance tomorrow. I'll go through them. Right now, we've got Joe from Fort Collins on the line. Hi, Joe. How are you?
Hi, Basil. How are you?
Very well, thank you.
Great. I have a couple of questions on your wave theory.
Yes.
If you take a long-term count, I know you start from the lowest point and count up.
Yes.
If we look at a long-term count all the way back to 1932, the Dow was at 4122. Have you ever counted all the peaks going up since then? And, in other words, what's 1999, what's 2007, that type of thing?
You know what? I'm going to talk to you while I do this at the same time. I have done many times, in fact, because I keep getting losing some data. It's terrible the way it happens. But I've counted peaks and troughs, etc., going back to the 1920, from 1920, I've got it right here. You can see it. I'm showing it. If you're looking at Tiger TV, anybody looking at Tiger TV, it is remarkable. It went to a peak G in December of 1925 at 157. The Dow pulls back, starts a brand new buy mode, and it goes up from that to peak A, B, C, D, E, F, and then another G. It's very unusual that you get these Gs, but that's the only count that I can get. It goes to a G, but the thing that would have kept you in the market was that the MACD was still strong. Remember, I spoke about that. I've spoken about many times that when the fast-moving average of the MACD is holding, that keeps the stock up. And finally, it goes to 386.10. The long weekend of 1929. I'll talk about this a lot more over the next week or two. This is August was when the Empire State Building papers were signed, Rockefeller Center, just all those big things, right at the top. It's an incredible thing how that happens. It pulls back to, it drops 49% to 195.40 in 3 months, just a real quick drop. Bounces 52% to 297.30 in April of 1930, turns around, and it comes back. It makes the dreaded H pattern. It declines all the way to 40.60, starts a brand new buy mode, and this is what I've been talking about for a while. I show this chart very often, and I show that the chart, if you looked at the chart during the news reports of the New York Times and every single newspaper about the Depression of 1930s, you would never have bought a stock. It's almost like now from 2009, you would never have bought a thing. You went from 40 to 195. That's a 500% to another peak G in the ChapmanWave in March of 1937. It plummets from 195.59 all the way down to a 50% decline to March of 1938. And then it goes up A, B minus, makes that H pattern that becomes an M pattern, breaks to 92.69, and then starts a beautiful peak, A, B, C, D, a 381% rally into 1946. Was that 46? Yeah, into May at 213.36. Interesting how many times May and September are bottoms or tops. Then it makes another dreaded H pattern and goes peak A, B, C, D, E, and then to another F and G. It's just incredible that this has happened to F and G in this particular time period. So yes, I've done the work on that. I've done it in all different time frames. This is the monthly. I've done it on the daily time. I've got it right here. I don't know if we can go to it. No, we don't have time. But I have it in every single combination. Why? Because I do a lot of studying on that. So I hope that helps you, Joe. We can talk about it more. Maybe we can start off tomorrow if you want to give me a call at the beginning of the show.
I'll do that because I have a second part to this question, so we'll take it up there.
I'm looking forward to it. Thanks.
All righty, folks. Thank you much.
Thank you very much. Folks, stay tuned for Larry Perseverance. Don't forget, I'm watching this real closely. A break underneath Friday's low will be very negative. I think we've got a rectangle pattern forming here, trying to have a rally to the upside. I'll be back tomorrow. Stay tuned for everyone else.